is Sunday, June 12th, and we've just come off pretty much, some choppy past few weeks, as expected. And as I mentioned before, I think we will continue to see slower market movement than what we've seen over the past, maybe you could say 2 years, 2, 3 years, as we wind into this period of the Fed trying to reduce inflation and slow inflation, and that being pretty much the primary goal. So, with the opportunities present, I think I continue to reiterate that if you're looking for fast volatility, I don't think you're going to see it. It's going to continue with this sort of flatter, slower movement as we kind of come back to a more normalized market. Um, and that means, more slower year to year movements as well, to get back to a more usual trend line, um, year to year growth in the overall market, but let's say S&P as well. And we haven't seen that for past 3 years, but I think the next short while will sort of compensate for that, and kind of level it out. And then in the short term, I think there are still a lot of good opportunities where you can see it. Playing index, like I've done this week, and then there's also things like oil, which is going to new highs. I do have UCO, which has appreciated significantly, up about 50%. Um, and that's oil ETF, long, and there are a couple of others. But I think that with regards to valuations are one of the most important things right now, because um, currently we see a lot of the market moving pretty uniformly, but there are some tickers that are a really good opportunity, and I am looking at more of a longer term perspective. But so note that, but it is a really good opportunity, I think, in the longer term, based on the valuations we're seeing today, and certain companies where you're again looking at, I think, 10x opportunities, 5x opportunities over the next 5 years on some of these tickers that have come and correlated a lot to some of the high growth names, although there are unique differences in in some of them. So um one I can mention is like Zoom, which I've been adding, and I think the valuation has come down quite a bit, and again, you're looking at at least a 5x opportunity, I think, over the next 5 years, or even say Tesla, as another one. One that I went in, Jemiah, which got extremely oversold, up about almost 65% in less than a month. So some of them also, you can have kind of a longer term time horizon. Although in the shorter term, you'll see that appreciation, and you can act accordingly, and take profits at that levels, like let's say Jemiah, for example, which it was up. It did move up about 65%. So I did take profit there, because we're getting such a large movement in such a short amount of time. And then, with these other companies, I think a lot of them are dead. Some of these high growth, and I don't think there's much to save them, but I think they're come to what they should be valued. So you're not even getting undervaluations in some of these market caps in these companies. And then moving into the remainder of the month, we are entering the end. What it will be the end of Q2. So Q2 ends in June. One thing that's significant about that is that we will see the Q2 GDP numbers, and with that, we will be able to either reaffirm or possibly delay the confirmation of a recession. So if we do see negative GDP numbers in Q2 following the end of June release, we will it will confirm recession officially with 2 quarters of negative GDP, as we did have last quarter being a negative GDP number. And if we do get the same at the end of this quarter, it will uh, cement and confirm a factual recession by definition. So that's one thing to watch. um, so that's pretty significant. We do have some economic releases as well this week, which are pretty significant. So we do have a Fed policy decision on Wednesday, jobless claims as well on Thursday, and then also PPI on Tuesday. So um, pretty significant. The main one is the Fed policy decision Wednesday. I think Powell will likely be speaking following that policy decision on Wednesday. So we'll see that. And yeah, I think that's at 2 p.m. Eastern Standard Time where Powell speaks and they get the interest rate decision and FOMC statement. We saw Bank of Canada commit to the same rate hike that they did the previous month, which was a few weeks ago. I predict that the FOMC, the Fed, will uh, do that same rate hike as well this Wednesday. So we'll see that, and I think the market will react accordingly. But yeah, so there is that short term volatility that I think is good to play in the short term, and then over the longer term as well. As I mentioned, I think we'll see quite slower, flatter movement for quite a while. So I think you'll have to kind of get used to that. But yeah, and then in regards to earnings, this week, we don't have much. Monday we have Oracle after hours, so that's one. Another one that's pretty significant, Adobe reporting on Thursday after hours. Some interesting movements with regards to earnings, like DocuSign, down 25% on earnings, pretty significant. DocuSign is quite a unique, company which doesn't have too many comparables, so it's one that's pretty interesting to watch. We're pretty much back at March 2020 levels on DocuSign. Albeit, it did just begin trading 2018 around there. But yeah, quite a bit of destruction in some of these companies. I think that the market sees as quite overvalued. You have to kind of look at debt ratios as well. As borrowing becomes more expensive. So there's that. And then you're looking at cash balance as well. Some of these smaller companies, maybe not necessarily DocuSign, but some of these smaller companies, they have to have quite a bit of padding of cash, because if they are in quite a growth phase, without cash, they do run the risk of illiquidity and not being able to fund their growth effectively. So with that, you have kind of a lack of funding because investors and that means even private investors um, are angel investors, etc., are less willing to fork out money, and with that, with some of these companies that are in that high growth phase, run the risk of really impending bankruptcy at that point, when they can't get the funding, or even the funding at the valuation that is sufficient. So yeah, there's that. But yeah, other than that, there's not too much to go over. I think, as I mentioned in the previous weeks, the strategy kind of remains the same. I think it's a slower time in the market, so um, you'd want to stay off of margin, as I mentioned, and just kind of go with existing cash balance. We saw this coming, and here it is, and we'll see quite a slower market movement, and you have to be kind of very particular with the tickers and companies you're purchasing. And with that, I think there are a lot of really great screaming buys, and great valuations that are here, and you kind of have to be selective, and choose to utilize those opportunities efficiently. So yeah, that kind of strategy remains the same. We're going to be entering, the next round of earnings seasons in July. So, when a lot of the fangs and major companies begin to report again. So, that will be coming up in about a month. So I think we'll see quite a bit of movement there. We do also, coincidentally, around that same time, around July to September, within that 3-month period, which is pretty much all of Q3, we do have a lot of the major stock splits actually coming to fruition, and taking effect. Amazon already has taken effect, and we do have Tesla, which just announced its details of the stock split, pending board approval and shareholder approval, 3-1. So I think that's pretty significant. I think with some of these companies, you don't see as much of a movement because they're more market correlated, like Amazon, which split itself, and didn't see much movement. Whereas I think with something like Tesla, you'll see quite a bit of upside movement. Not a crazy amount, but it's you'll see some momentum. We did even have after hours. We up about 2% after hours on Tesla, back above 700. On news of the 3-1 stock split. So yeah, that's pretty significant, and I think again a really generational opportunity. I think, given that when you really look at it on a valuation standpoint, Tesla is trading under where it was in 2021, and since then, if you look at how revenue has grown, how their capacity has grown in manufacturing, opening up gigafactories during that time, Berlin in Germany, and Giga Texas as well, and then you could even say Giga Shanghai, which was a little bit before that. Um, you're looking at what should be a really big valuation growth, but the valuations have actually come down to back to these 2021 levels. So I mean, albeit you can say that um, valuations were inflated at that time, but I mean, if you're looking at a 6-year price to earnings, and more important, price to earning growth ratio, you're actually looking at quite a bit of undervaluation there, and then in addition to that, they've completely wiped out their debt, so they have no debt, and their cash balance is only increasing, and they're sitting on mountains of cash. They'll never need funding. They'll never need to borrow. They'll never need to really utilize that cash. And so all of that cash is completely deployed into further growth and growing and manufacturing and whatnot. And they'll never really need any debt. So in essence, as a company, interest rates don't affect them. So it's something that's pretty significant that I think people don't a lot of people don't really realize. And then in addition to that, just a few catalysts. I follow Tesla quite a bit. They do have the AI Day coming up as well, which is AI 2, and I think it'll be a further focus on the Tesla bot, which they'd like to begin production in next year. So I think that'll be pretty significant. We might see some sort of FSD updates with regards to AI and their learning and progress towards that. So another thing that's pretty significant. But yeah, that's about it on my end. So I'll just pass it on to DJ to share his thoughts on his end and go over his usual SPY analysis.
Yeah, so I think I think Ramsey summed it up pretty well for kind of the state we're in and the volatility and the trend kind of going forward. So pretty much agree with what he said. So there's not too much to add besides some technicals on SPY, I guess. We were kind of stuck in this flat range for about 2 weeks between 417 and 407. We basically broke down a day before the CPI numbers, and then the CPI numbers were worse than expected, so we had follow through to the downside. And we pretty much dropped like 25 points in the span of the last 2.5 days. And now we're kind of basically back to around, 3% away from the lows in late May, where we bounced off previously. So that holds true for both SPY and QQQ. Pretty much what I expect to happen is a 50 hike on the Wednesday meeting. I don't expect 75. I don't expect 25. I think 50 should be like 99% what is expected and by the market as well. How the market reacts to that is uncertain. Technically speaking, either we will find a double bottom or a higher low somewhere between 380 and 390 and probably bounce back a bit and then, continue the kind of chop pattern that we're in. I think there's a slow chance, but there is a chance we will flush 380 and create a new low in which we will kind of confirm the bear trend. But even when that happens, I do think, you will probably get some sort of bounce back and it will continue to kind of trade range bound just for the next, months, if not longer than months. It really does feel like the amount of volatility has dried up significantly. The only time we really have big moves are basically during like catalysts, during like CPI numbers or FOMC, or like something significant macro wise. Other than that, it does seem like we're kind of just trading, about a 1% range per day, up and down, and kind of choppy. And it doesn't really look like anything significant is really going to change that. So personally, I do expect the play to be kind of, focus on a select few tickers and look for opportunity on Catalyst once in a while. But other than that, there's not really much you can do intraday, in my opinion. I think there is a play, if we flush early next week, say Monday, Tuesday, and we break into new lows, then there's probably a long play available heading into FOMC to get some of the short cover. But other than that, I don't really expect too much in the short term. So, SPY, weekly, yeah, like we had a very bad kind of weekly candle on the previous week. So we're basically getting to retest 380 on SPY, but I'm not really too sure what direction it will go. And, even if you break to new lows, like for example, the previous low was 385, and it broke 385 to 380, and then it had a, 30-point rally back up, and now we're down. So, it doesn't really matter too much, whether or not you kind of break supports or resistance right now. It just seems overall you might just get a little bit of a flush, but remain kind of range bound macro wise. Monthly chart, we do need to break over this 420 range on the monthly for SPY to get any kind of upside momentum. And until we break these monthly EMAs, it looks more likely that SPY will kind of continue to downtrend from here. But there will probably be like bounces in between. So it's gonna be a kind of a more slow and drawn down bear market in my opinion. QQQ instead of 380 on SPY is basically 280 on QQQ where there's support, but this chart is literally identical to SPY, so there's not really too much to cover there either. If 280 holds, we'll probably get a bounce. 280 flushes, we'll look for something lower, but then probably get a bounce anyways. Because to me, it just feels a little bit unlikely. Like if you flush 280 and you just free fall like down 20%, I don't really see that really occurring. So I do think like any break of supports, you'll get some sort of relief bounce before maybe further continuation down, and it'll be relatively slow. Um, like slow moves, and then like in a span of 6 to 12 months, then like you may be down an extra 10-15%, but I don't really think it's going to happen very quickly. And then I don't really think the bull market case is alive until the Fed actually like speaks up on pausing the tightening. They don't really need to end the tightening, but if they don't have any intention of uh, pausing the tightening and fighting inflation, and if they're not acknowledging significant improvement in inflation, I really don't think we're going to uptrend in this market until that occurs. So I think it's kind of just a you know scale in time to time and listen to what the Fed has to say. They're kind of in control of the markets for the next while. Yeah, other than that, I really don't have too much to say. There is one thing. I think Polestar merger is next week or the week after. I'm already out of the position, but I don't know if it'll run up during it or not. It doesn't look like it. To me, I think there's more possibility of downside and upside once it de-SPACs because it will no longer have the $10 floor. So that's something to kind of watch out and keep an eye on. But other than that, I'll just be watching the Fed and then seeing if there's any moves to make next week, but not really forcing any trades these days. So yeah, that's about it on my end. Ramsey, if you have like anything to comment or close.
Yeah, I agree actually with what DJ said on Polestar. Because what people don't realize is during this time, the actual best thing for Polestar to happen is not have a merger, right? Because uh, unlike in the entire equity market, there's no floor, right? So um, during this time, you could say maybe from February until now, maybe Polestar would be trading at $9, maybe $8. I don't know, right? But it's had the $10 floor, but now I think there's a possibility the Polestar ticker has to play catch up to the rest of the market, and what that means is catch up to the downside, right? Um, so yeah, I think a decent possibility that we see something like maybe $9, which would be 10% down from here, or maybe $8, which is more significant. Which I don't think it'll go that low, but I guess we'll see. But yeah, I mean, when that does happen, I think it presents quite good opportunity because again, Polestar is quite undervalued overall. They are a company that, unlike these other EV companies, they're actually doing numbers and they're initiating deliveries. They're in my opinion, they're the best legacy spin-off when you're comparing it to companies like Ford, GM, Toyota, Honda, etc. Volvo is doing it the best, and that's with Polestar. So I think they're really good, and I think it again presents a good long-term opportunity over there. In addition to a company like Lucid, and then there's Tesla, which is I think not even in a comparable with these companies, but yeah. So yeah, I agree with DJ on Polestar. I think you could see some downside. Again, everyone's waiting for this merger and thinks when we get this merger, uh, we're gonna blast off. But I think that might have been the case if we had a merger in maybe January, December of last year. If we had a merger that time when market momentum was still there, but I think if we have the merger now, we won't see that same movement. So yeah, I agree with that, and I think that's a good point. But yeah, other than that, uh, pretty much summarized our thoughts. So we'll wrap it up here. And we will be uploading the live session to YouTube later today. Hopefully earlier than later. I think around 6 or so. I'd estimate. Um, so yeah, for anyone who missed it, I know a couple of people messaged me advising they will not be able to make it right now, so they'll watch on YouTube. So we'll upload that. And yeah, other than that, I hope everyone has an amazing remainder of the weekend. Great Sunday, and we'll be back on Monday to go get this money, guys. So take care, everyone, and enjoy the remainder of your Sunday.
Yeah, take care, everyone. Cheers.